Ladies and gentlemen, on behalf of Captify Consulting Investor Relations team, I welcome you all to the H1 FY26 post-earnings conference call of Kaka Industries Limited. Today on the call from the management, we have with us Mr. Chintan Bodhar, Chief Financial Officer. As a disclaimer, I would like to inform all of you that this call may contain forward-looking statements which may involve risk and uncertainties. Also, a reminder that this call is being recorded. I would now request the management to brief us about the business and performance highlights for the period ended September 2025, the growth plan and vision for the coming year, post which we will open the floor for Q&A. Over to the management team.
Good afternoon, everyone. Very warm welcome to all our investor, analysts, and stakeholders joining us today for Kaka Industries Limited conference call to discuss our financials and operational performance for the first half of FY26. I am Chintan Bodhar, Chief Financial Officer, and it is my pleasure to share our progress and outlook with you. The first half of FY26 has been a period of strong operational execution and financial growth for us. We reported revenues of 1,248.9 million, reflecting a 30% year-on-year increase, driven by volume traction across our key product categories. Our EBITDA stood at 167.5 million, up for 31% YOY, with EBITDA margin improving to 13.4%, showcasing our continued focus on our cost discipline and superior product mix. Net profit rose by 35.9% YOY to 88.5 million, maintaining a healthy net margin of 7.1%. This robust growth was supported by expanding our customer network from 300 plus to over 450 partners, enhanced production across WPC profile, UPVC sheet, panels, and UPVC profiles, and strong segmental momentum in PEB and HVLS fan, both of which grew by around 132% year-on-year. Overall, our H1 results reaffirm the strength of our diversified business model and our ability to scale efficiently while maintaining profitability. We now operate one of the most integrated manufacturing facilities in our sector, located at Kheda district, Gujarat. The plant has expanded our total capacity across PVC, WPC, UPVC, and roofing products, ensuring smoother operation, higher automation, and improved margin efficiency. We are also proud of our wide network, over 450 plus customers across 20 states and union territories, supported by 3 depots in Hyderabad, Noida, and Ahmedabad. This network positions us strongly to cater to growing demand across both established and emerging regions. Let me now share a few important business updates and forward-looking initiatives. We would like to invite our all valued investors to visit our manufacturing facility in Kheda, Gujarat. It is a truly state-of-the-art plant built with modern technology and operational excellence. A visit will offer you first-hand insight into scale, quality, and efficiency of our operation, something we take immense pride in. Our business model remains evergreen in nature. The demand for our products continues to grow steadily, supported by urbanization, real estate expansion, and shift toward engineered materials. These factors give us strong confidence in sustainability and scalability of our business for years to come. Strategically, we are working towards filing our application for migration to mainboard by November 26, with the objective of achieving a parallel listing on both NSE and BSE. This transition will enhance our visibility, broaden our investor base, and further strengthen our corporate credibility in the capital markets. We continue to invest in product innovation and diversification. With one of the largest and most efficient supply chain networks in the country, we are well positioned to introduce ancillary and value-added products with minimal incremental cost or effort. This flexibility allows us to capitalize quickly on emerging market opportunities while maintaining operational agility. As a part of our sustainability focus, we are establishing a 7.5 megawatt captive solar plant in Kheda district. Once it is operational, it will reduce our power cost by 40 to 50 lakhs per month while supporting our long-term commitment to clean energy and operational efficiency. Although commissioning was delayed due to prolonged monsoon conditions, we are confident that the project will be completed in the later part of the final quarter. Given our encouraging H1 performance, our intent for H2 is to build upon these gains and deepen our focus across key business areas, including brand repositioning, market penetration, and operational scalability. We are confident that our strong foundation, integrated capacities, and robust governance will continue to drive consistent growth and long-term value creation for our shareholders. I would like to express my heartfelt appreciation to our management team, employees, partners, and shareholders for their continued trust and support. At Kaka Industries, we remain committed to profitable growth, sustainable operation, and transparent stakeholder engagement. Thank you once again for joining us today. We are now open for the question.
Thank you, sir. All those who wish to ask a question may use the option of raise hand. In case you are unable to raise hand, just drop a message on the chat window and we'll invite you to ask a question.
Sir, while the question queue assembles, it would help if you can guide investors on what's happening with your new plant now that you've got direct power supply, and how is the capacity ramping up in terms of production as well as sales?
Okay. So overall, if we look at the installed capacity for the first half of the year, we achieved 50% of the capacity on an average across the categories. And if we say at the available capacity, what was the available to for the production, so it is around 65% of the capacity we have achieved and utilized out of the available capacity. And for the month of September, it is around 80% on an average out of the total capacity available.
Okay, sir, there is one question, raised hand. Raghav Maheshwari, you can go ahead.
Hi, sir. Am I audible?
Yes.
Hi, I'm from Kamayakya Wealth Management. I wanted to get an idea upon on the capacity utilization that has been there for this H1 basically, and if you can give some insights on raw material costings.
So as I said earlier that from the perspective of installed capacity, for the first half, we have achieved around 44-45% of the capacity on a general, overall basis. And out of the available capacity, for the first half, on an average, it was around 60 to 65%.
And is it getting targeted to ramp up in the second half?
Yeah, so if we see from the month of August and September, we have achieved almost 80% of the total available capacity. So I think for the rest of the financial year, we are confident that we can maintain that.
Okay. And is the top line growth sustainable, sir?
Yeah, it is sustainable. I mean, we are confident that we can achieve the, 30% year-on-year growth for the rest of the year also.
Okay, sir. And sir, one last thing, if you can comment upon the input costs, is there any trend you are seeing
No, it is
and on
stable.
a competitive landscape actually?
For the raw material, I mean, input cost is almost on a, parallel level. I mean, there is no major spike on either ways.
Okay, sir. And what about the competition, like on the overall business? Because there are peers entering into this industry.
Yeah, it
All
is
are going at
obviously
30%. So,
obviously this competition are there, and we are confident that we can achieve because we have confidence with our dealer and distribution network and the marketing strategies we are opting for. We are collaborating with the influencer and we are being registered with the government agencies also. So we are confident that we can achieve the our projected growth.
and any new line of product which we are moving into or
No,
planning
sir.
to?
No, sir. No, sir. As of now, we will focus on the available capacity and the available product portfolio.
Okay, sir. I'll join back with you, sir. Thank you.
Thank you.
Thank you, Raghav. We'll take the next question from Divyam. Divyam, you can go ahead, please.
Hello, sir. I just wanted to know that how much of the raw material is sourced domestically versus imported, especially for the PVC resin and compounding materials.
PVC resin is the major material. Yes.
So,
Sorry,
how
I
much of it
couldn't get
is
you.
uh, domestically sourced versus imported?
No. It is 100% from domestic market.
Okay, and I have one more question that what are the what are the key criteria for selecting new depots, and are there any plans to expand beyond Gujarat, Telangana, and Uttar Pradesh in the coming years?
So we as of now we have only three. I mean, three depots, and it is possible that if we want to grow but in a particular area and we want to cater the retail part of the area, then we may open some depots. But as of now, there is no any projection on the depot side.
Okay, sir, thank you. And one more last question. Given the fragmented nature of the market, do you foresee any inorganic growth opportunities and some merger or some partnership with other brands?
No, sir. As of now, there is nothing in mind. We are focusing on the organic growth and the product portfolio we have.
Okay, sir, that's it. Thank you so much and all the best.
Thank you.
Sir, we have a question on chat from Tanvi Bhandari. She is asking, are the margins sustainable and is there a headroom for growth as peers are delivering better margins?
So, if we see historically, we are maintaining and we are gradually improving our EBITDA margin, and it is sustainable, yes. And if there is always a headroom for the improvement, so we are working on that.
Okay, sir, we have a follow-up question from Raghav. Raghav, you can go ahead.
Yeah, sir, I just wanted to get an idea upon our, marketing strategy. Like, how are we planning to grow our channel? Because since we are more into D2C, B2C, so in that way, like, what is our plan ahead?
So, as I said earlier, also that we want to expand our presence in the existing and the new market, and we want to broaden our width and depth of the product distribution network. Want to
What
build
kind
the
of new
category.
markets, sir, if I may know?
See, largely we are present in Gujarat, and majority of our revenue is coming from Gujarat. So, as of now, we are focusing on Telangana, Maharashtra, Karnataka, Hyderabad, Rajasthan, Rajasthan, and UP and MP. So at all the states, we are looking for the opportunities and expanding ourselves.
Okay, sir. Okay. Thank you, sir. That's all from my side, and all the best.
Thank you.
Sir, we have a question on chat. Uh, the question is, how are you working on raw material volatility? Since as your capacity grows, you will also need to stock up on finished goods and raw material.
So raw material prices are stable from last 1 year. I mean, there is no major change. And if there is any major change, like overall level, I mean, 5 to more than 5%, then we will pass it on to the customers.
Okay, and another question is there any plan for forward integration into making our own furniture or doing direct fabrication?
So for the UPVC window profile, we have opened one facility in Ahmedabad itself, and gradually we will add the facilities in UPVC window as of now. And no other than the UPVC window, we are looking for any forward integration.
Okay, sir, we have a follow-up question from Raghav. Raghav, you can go ahead.
Yes, sir. Just one last thing, sir. Just a second, sir. I'm facing some network issues. Can I go next?
Yeah. So we'll move on to Mrunal Kadam. Mrunal, you can go ahead.
Hello, I'm audible.
Yes.
Yeah. So cash flow from operations have increased quite a bit from 3.8 crore last year to 15.7 crore. What efforts did you take to improve your cash flow scenario?
So we are managing our working capital better, and overall in rupee terms, profit is also increased. So that is the reason it is. I mean, it is positive. I mean, more higher side in the compared to last period.
Okay. And so my follow-up question is for new cities or states, what strategies are we adopting to compete in this market in terms of networks, margin benefits, etc.?
So, as I mentioned earlier states, we are looking for the existing any dealer or distributor they are there in PVC or in particle board also. We are contacting them. We are collaborating with the influencer also, and participation in the exhibition at local level. So that is the go-to market strategy as of now for the second half and the more, I mean, for 1 year, next 1 year.
Yeah. Thank you, sir.
Yeah.
Take the follow-up question from Raghav. Raghav, you can go ahead.
Yeah, sir, I just one last thing. I wanted to understand the difference on margin that the Kheda plant will create, if you can give on some percentage basis.
So I think there is no major, I mean, everything is shifted to Kheda district now. Kheda plant. So whatever we are producing, majority of the production is coming from Kheda only.
No, I meant due to the solar plant commission.
Okay, so once it will come, then EBITDA will definitely improve, and month on month basis, we will see in rupee terms 40 to 45 lakhs EBITDA will improve.
Any percentage on EBITDA effect can you provide us?
That will depend on the future revenue, na? So that's why we are working on only rupee terms.
Understood, sir. Understood, sir. Okay, sir. Thank you.
Thank you. We'll take the next question from Manan Madlani. Manan, you can go ahead, please.
Yes, hi, Chintan sir. So just wanted to know for the H1, if we compare to last year, our gross margins are down from 35.8% to 32.6, despite increased share from WPC. I mean, and given the PVC prices were stable, so what could be the reason for this dip in the gross margin?
So in rupee terms, if you can say per kilo, it is reduced by 2.5 or around 3 rupees. And by margin, it is less than 2% compared to previous year, right? So that is basically because of low cost product mix, and the discounts may be offered because of aggressive sale. So it is not on a major side, because ultimately on a EBITDA side we are maintaining per ton and the percentage wise. So there is no issue with that.
Okay. Uh, and just to follow up on that, you said whatever discount we have offered in terms of sales, is it for the new geography or for the existing geography?
It is for new geography.
Okay, so going forward, what would be our target to achieve sales? Like, uh, are we going to be aggressive?
Yeah, 100% yes. Because we have the extra capacities also, and we want to utilize it to maximum capacity.
Okay. And is it just on the basis of pricing or the payment condition will also change?
No, on payment side, we will not compromise. I mean, whatever the strategy we are following up, that will continue.
Okay, so because if I consider, the gross working capital, right? So your inventory plus receivables as a percentage of sales, it's been increasing, though it's at a decent level compared to peer, but it's increasing from 21% in FY23 to 35% in the first half. So just wanted to know, will it stabilize here or it will increase from here as well?
Data side, I mean, it is almost same 51 was there on the last for the last half, and it is
Correct,
55 as of now. So
correct.
inventory level, it was more than 115 days. It is now around 90 days. So I think it is in control, and always we are keen to keep the working capital in control.
Okay, fair enough. That's it from my side. Thank you so much.
Thanks, Manan. We'll take the question from chat. It is a follow-up question from Tanvi Bhandari. She is asking, you have guidance of 30% growth YOY, but last year also this guidance was missed. So will this guidance be achievable this time? Also, what's the current order book?
So last year we were facing about for the electricity disruption. So that was the main reason. Last year it was not achieved, and the dedicated line will come in by end of January. So from that point, there is no issue with the production, and that's why we have achieved 30% in the first half, and we will continue to on the same side or for the second half also. And as we are working with, I mean, there is no specific order book we are maintaining. On a month-on-month basis, we are getting orders from the dealers and distributors.
Okay, and sir, we'll take the next question from Ashish Kumar. Ashish, you can go ahead, please.
Thank you so much. So my first question is, are there any plans for further capex?
Sir, it is on a regular basis, because if we see at the overall level, at the company level, we have unutilized capacity in some of the product. But the core product of our PVC profiles and WPC, we are almost near to 80% of the available capacity. So we may add some of the lines in the PVC profile and WPC profile.
So for that, what kind of funding will you need?
So there is no specific major funding we will need. It is out of, I mean, internal accruals only.
Okay,
It is
alright.
on a gradual basis. There is no specific focused addition.
Okay, so my other question is that will we need to buy any new land for any further capex if you can more and or current?
No, sir. For the civil front side, we have pending. I mean, we have open space, and we can definitely add lines in the current facility only. So there is no need to add any land capex.
Okay, sir. That's it from my side. Thank you so much.
Thank you. We'll take the next question from Divyam Doshi. Divyam, you can go ahead.
Yes, sir. I wanted to know that with the growing consumer preference in sustainable materials, are you seeing higher adoption of WPC products versus traditional wood-based furniture?
Uh, Sir, if you can ask specific question, I didn't understand.
With the higher adaptation of with a higher consumer preference of sustainable materials, are
Yes,
you
sir.
seeing higher adoption of WVC products versus traditional wood-based furniture?
Yes, sir. Yes, WPC profiles and PVC profile both are the replacement of traditional particle board furniture. So definitely, people are accepting these sustainable products.
Okay, and one more question that the company was empaneled with the Gujarat Police Housing Nigam and Military Engineering Services, right? So what
Yes,
is
sir.
the pipeline or revenue contribution from this client? And could you give me a guidance for the next financial year, that is FY27, please?
So there are multiple orders we have received, but it is on a very small in amount. So that is not the major order book we have from government entities. But going forward, we will focus major. We will have a major focus on that, and we are uh, creating a team for that also. But as of now, there is nothing major from these entities.
Okay, and can you give me a guidance for the next financial year, that is FY27, about the margins and the top line?
So based on the operational capacities, organically we can grow 25-30% year on year.
Okay, sir, that's it. Thank you so much.
Thank you.
Uh, Sir, we'll take the next follow-up question from Mrunal Kadam. Mrunal, you can go ahead.
Yes, thank you. Further to what you have said, can you guide on your competitive positioning outside Gujarat and what kind of challenge or competition you face and what measures are you taking to increase share? Is it just a pricing strategy or is there some focus on value addition? You have also set up higher end machines in your plant for customization and digital printing. Has this kind of requirement picked up in terms of demand from customers or are traditional products the focus area?
Okay. So if we say at the competition level, there is a competition, but every company has a their own products and the colors and the textures they have, and the strategies what we are focusing not only the pricing. We would not compromise major on the pricing, but definitely we are collaborating with the influencer and the we are looking for on a higher side of the distribution network in other states also. So Gujarat definitely we will always focus and we will maintain our market share. But for the other state, we want to add aggressively sales from that states.
Okay. Sir, are doors and windows becoming voluminous products and how do you expect this growth in this subcategories?
So majorly our profiles are being used for furnitures. And the doors are, I think, total, it is 15%. Doors and windows are only 15% of the total sales. And majorly it is used in furniture.
Anybody wishes to ask the question, please use the option of raise hand.
So since there are no further questions, would you like to give any closing comments? We can
Yes.
end the call.
So we hope we have been able to address your questions satisfactorily. Should there any be queries that remain unanswered, or if you need further clarification on any aspect, please feel free to reach out to us at your convenience. We truly value your time, your trust, and your continued support, and we remain committed to providing complete transparency and timely response. Thank you. Thank you once again for joining the call today.
Thank you, sir. And thank you to all the participants for joining on the call. This brings us to the end of today's conference call. Thank you.